Welcome to our latest quarterly update. I'm joined here today by Gregor Hirt, our global CIO of Multi Asset. Greg, let's dive straight into it. What have the key market developments been over the past 3 months?
Well, recent months have seen a roller coaster ride across the financial markets for both equities and fixed income. The summer's equity bear market rally was followed by a sharp correction, and we are now seeing key indices climbing again. A new British government presenting more traditional economic policies than the previous one, as well as the new Italian government's softer than expected stance toward the EU, have served to calm European markets. Indeed, investors have now finally come to the realization that both the Fed and the ECB are serious about their commitment to fighting inflation and will do whatever it takes. And this is really meeting with some success, more in the US than in Europe, as the most recent inflation data for the US has shown. So while speculations about the pivot in central bank policy are premature in our view, they can certainly support risky assets in the short term.
Thank you for that. So what do you expect to see over the next quarter?
Well, for equities, we have tactically moved to a more neutral stance as seasonality and high cash levels could be supporting for markets. However, the long-term view remains a rather cautious one, as market expectations for longer-term inflation are still too low while earnings expectations remain too optimistic. In Europe, we maintain a cautious view, as a winter and spring recession is our baseline case, while inflation data remain worrying despite a very calming down in the energy supply situation. On the contrary, Japan is our preferred market for the moment, largely thanks to its attractive valuation and the Bank of Japan staying on course for now. In emerging markets, there are signs for some opportunities in Latin America. But, the elephant in the room is certainly, and again, China, where we are finally seeing a few encouraging signs. Indeed, the latest G20 meeting between Xi and Biden was more constructive than we had expected, and the new, slightly more relaxed 20-point COVID policy should support domestic consumption. But there are still the need for confirmation of much better economic numbers. Finally, in terms of currencies, our outlook on the US dollar remains constructive, also as a hedge to market risk. A hawkish Fed, global risk aversion, a low-growth environment in the Eurozone means we are positive on the greenback with respect to the major currencies.
Thank you for these insights. What does this mean, though, for your positioning in your portfolios?
Well, we remain overall cautious in our views of risky assets, even though tactically we have neutralized a large part of our underweights. Recessionary risks are very high, and we expect the major central banks to continue with monetary tightening. Indeed, timing equity market recoveries is heavily dependent on how the coming recession develops on both sides of the Atlantic. The first halves of recession historically offer the best entry points as valuation begin to bottom out. In the US, this should happen in the second part of 2023. Now, what is for sure is that TINA, there is no alternative, has gone, as US government bond yields have risen above 4%. We therefore added some weight in US govies, especially as the Fed is ahead of the ECB in the rate cycle, with now significant hikes having been already priced in. We also hold to our position in US high yields, for the moment at least. True, they could suffer as default rate rises, but until we enter a recessionary environment later in 2023, we want to be able to collect the attractive carry. With respect to commodities, two factors are working against each other. Supportive supply-side fundamentals tempered by recession concern in several major economies. We thus also remain neutral here for the time being, with a clear focus on the situation around Iran and Saudi Arabia.
Greg, thank you very much for your insights today. We look forward to revisiting all of these topics with you in the next quarterly update.
And also from my side, thanks a lot, and see you in 3 months.
马上订阅安联投信官方 YouTube， 投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书。